Hello and welcome. I am your host, the best podcast host in the universe, Steve Cully. I'd like to thank our sponsors at Procyon Partners. Procyon, one of the top 50 fastest growing companies in the nation. They specialize in employee benefits, wealth management, and retirement planning. President Sean Rabinowitz, proud supporter of our podcast network and everything we do. Green Street Trust International, owned and operated by Rennell Jump and UConn legendary men's basketball player Jake Voskuhl. They specialize in tax plans for businesses large or small. They will save you money or get you a big fat return on your taxes. To schedule your free strategic tax planning session today, go to www.greenstreettrust.com. Pete Finch and the Finch Law Firm is located in Bridgeport, Connecticut. If you've suffered any type of personal injury, slip and fall, car accident, your mother-in-law ran you over with her car, your wife got angry one night and decided to stab you, the Finch Firm is for you. Pete has won legal battles all across the state of Connecticut. He will go to war to get every dollar you deserve in compensation. You just have to remember, in a pinch, call Finch or go to his website, thefinchfirm.com. Dynamic Human Performance is owned and operated by UConn legendary running back Andre Dixon. He trains boys and girls of all ages, all sports. He has a boot camp program 7 days a week, 6 a.m. You want to get in shape, you go to Andre. He has an athletic development program where he trains boys and girls in the sport of their choice from the ground up, helps them reach their full potential, be the best they can possibly be. Andre has sent boys and girls to college on scholarship for all different types of sports. To work with the best, he has a 5,000 square foot state-of-the-art facility in Hartford, Connecticut. Go to www.dynamichumanperformance.com. All right. And here we are for Luther James Insurance with the man himself, James Whitfield. James, great to see you.
Same here. Great to see you. Good morning, everybody.
It's a very happy new year. It's a very happy new year.
Yes, it is. Starting out a little happy.
Yeah, exactly. So I had a friend who contacted me. He does not generate a ton of income currently. He's under six figures.
Okay.
He's married. He's with kids. Financially together, I mean, they obviously would have over six figures. Would it be possible for him to be put into a policy, even though he does not make, significant income currently?
I mean, anybody can get insured as long as you have a pulse and the ability.
Right. But I mean, is it worth it to get something? Like, is that something that you would waste your time with if it's not going to provide anything on the back end, for now?
I mean, I would help them in the sense of, if they're serious about it. You know what I mean? I tried to do that for a family member and I got screwed. So
I know you did.
But my thing is,
yeah.
If they can come to an agreement and put their resources together, then I can possibly do something for them where it's still gonna, it'll still produce some kind of income for them, tax free.
Now his question was, would he have to pay? Because we showed a couple of the policies. Would he have to pay like $20,000 or $25,000 all at once, or is it possible to spread it out over a couple months?
It's possible to spread it. It's just that I cross my fingers when I do it, in all honesty.
Because people cancel.
People change their mind like New York changes weather.
So the more you can get up front, obviously, the better.
Well, it shows that you have skin in the game. So if you only got a couple of $100 in there and you're like, I can afford to lose that if I don't pay, then it's not, you wasted your time and mine.
Right, but if they put like 10 grand in, and then they put 10 grand in over 2 months after that, I mean, 10 grand isn't something that they're going to walk away from.
Oh, absolutely not. I can do that. Like if they're going to do 10 grand in a couple months, why not just set that up to do it for the year? 10 grand a year, and then they put, they can overfund at that point. They can, keep doing the contributions to it.
Yeah. That's what I was telling.
Yeah, they can do something like that. So like if they had 10 grand a day, and I would do an illustration for 10 grand a year, I can possibly get them something. I could possibly do something for them.
Beautiful. So my other friend, who he's young, which is great. He is.
Can I show you something can I show you something that I did yesterday?
Absolutely, it's your show. Please do.
All right, hold on a second here. Share screen. Let's see. Oh, window. Here we go. No, this one. So I'm not going to expose his name.
Sure.
He's 24 years old. He's a aspiring soccer player. He's a professional soccer player. He doesn't make millions of dollars. He makes like 50, 60 grand a year. So he had he already has a 401k that he started, and he says he got about 15,000 in it. So I said to him that if you can continue to do this yearly, I'll make a plan for you. So can we zoom in on the you guys able to see this, or I have to blow it up?
No, I can see it.
Okay, let me. All right, so,
better, yeah.
So he put in 15,000. So what I did was I did it 15,000 for 10 years because he's 24. So he doesn't have to he doesn't stop paying until he's 34, 35. Right? So it's 10 years. That 10 years he's contributing $150,000. Okay? So
wow.
It comes up to $185,000 in cash, but that's not where we're going.
No, I see.
So where we're going is these are long time things. So he's not contributing anything. Now his money is compounding in interest every year. Every year he's getting something in the realm of like 8.5% interest. Right?
And he paid for 10 years.
And he paid for 10 years. So this is setting him up for retirement. Now I can do something real aggressive if he's trying to pull money out. He's able to borrow from his policy at this point at any time, because like at 44 he has 340,000 over the 150,000 that he's doing every year, right? So as that money's compounding, by the time he is 65 years old, right? He has an income that's tax-free of $127,849 every year. Tax-free.
Yearly income.
Yearly income that he doesn't have to worry about, tax-free.
Jesus.
Now, at any time, again, he's able to borrow money from his policy if he needs to, if there's any emergency, but it takes time for you to do that. So let's say he wanted to get a house. At 34, 35 years old, he has $196,000 to play with. If he wants to take out 50, 60,000 for a down payment or something like that.
Now, is that something that, if you go to get a mortgage from a bank, that they'll look at?
They can't touch it.
Well, I mean, if you say that,
yeah,
know,
because
okay.
they look at every, when you're applying for a mortgage, it's worse than a colonoscopy. Because they're looking at everything. They're looking at whatever you have that'll
They
contribute.
roto-rooter right in there.
Exactly. So if he did it, like, let's say he got married and he's like 40 years old, he has $283,000 to play with if he wanted to borrow from it. But if he just treated this as a 401k, like a savings plan, and he doesn't touch anything, he's entitled to this $127,849 every year, and he started off at 24 years old, and he only did 15,000
for 10 years.
For 10 years, so that's $150,000.
That's amazing.
So as you can see, this money goes to perpetuity. And right now he has no beneficiaries because he's single.
Yeah, just him.
But if he did get married, he puts this thing into a trust. It's going to keep paying him money.
Right. That's what Rob had talked about in the last presentation he made, was wills and trusts.
Yep, correct.
So you can convert this into a trust.
Yeah, well, you can put the trust as the beneficiary, so you can make a trust.
The trust is the beneficiary, right?
Correct.
Okay.
Correct. And then you assign people to the trust
to distribute the assets to the different people in the trust.
Correct. And look at this: at 74 years old, he has $2 million, 2.3.
So you were saying it can take some time.
These things take time
to get money out. You're saying,
well, as long as it's built properly. So, like I said, here he is at 24 years old, right? He put in his first 15,000. With the cost of insurance and everything, he's only, that 15,000 is really almost 14. It's like 13,900.
Well, no, I'm saying he wouldn't obviously take it out then, but I'm saying like 10 years later.
10 years later, yeah. So 10 years later,
if he wanted 20 grand or something.
Correct. He can do that. Actually, he can do that in his third year. But right, if you keep itching to borrow, then
you want to forget about it. I get that.
Yeah.
But you're saying, like, does it take like literal months to get the money out?
No, you can take a loan. You can borrow a loan. You can do a loan. Yeah, you call the insurance company and say, "Hey, I need a loan of 20 grand or 50 grand."
So it's that easy. Okay.
So you're paying yourself back in this point 6.5%, right? So yeah, if he was to pay it back, he's paying himself back 6.5%, as opposed to going to a bank or a credit union
where
and pay back 20% or 15%
with the interest. Yeah,
with the interest. So why do that? This is called being your own bank.
Exactly.
If you can put away more, it's even better. It's more beneficial. But this is a simple person. This guy makes 50, 60 grand a year. He has no responsibilities, just him. But he was smart enough to put money away for retirement early, because he knows in his career is only 5 to 10 years.
So Rocky says, I thought life insurance was basically when you died, and
it is.
That was it. But
there's certain policies.
From what you're showing, you can use a life insurance policy and generate wealth off of it.
Generational wealth if you start early enough, yes.
Generational wealth. Okay. And he wanted to know, because he was clueless about this, what percentage of people would you say know the ins and outs of life insurance and the benefits that it truly provides.
2%.
It's 2%. That I believe. So 2%, like I said, most people think life insurance is final expense insurance. You put the money in, it pays for the funeral, and that's it.
That's what. Even when I speak to financial guys, not a lot of them know that you can do that with life insurance.
Even the financial experts,
because they're taught to offer variable products, because they have like a Series 6, Series 7 license.
Yeah, of course.
So I get all the time. Where even some of my colleagues say to me, "Oh, go and get your Series 6, Series 7." I said, "Why? Why am I gonna then study again for Lord knows how long to get certified to go and work?
Well, you just learned the answer.
Credential or something to be a financial advisor, when what I do is the exact same thing, but it's a better result because there's zero risk. This is the safest way
there's no risk.
Yeah. This only pays you when the market goes on the index. So you get paid on the index of the S&P 500. That's how this works.
Right.
And even if the S&P, which it hasn't happened in God knows like 40, 50 years, we've never had a crash in the S&P. But even if the S&P went bad, for argument's sake, the money that you have in your policy stays the same. You have no risk of loss. Your policy has to be built properly.
I know you've answered this before. Rocky also wanted to know, apparently he's talked to people, someone about a term life insurance policy.
Don't do it.
And is it possible to convert a term policy to a whole life insurance policy?
It's possible if you've had the policy for a long time. But
okay.
Yeah, you can't just, if you're going to switch it over, like you're going to get it a year and then switch it over to a whole life, and it has to be in the same company.
Okay, so it would be something where it would take like a decade before you could
I'd say like 5 to 10 years. Yeah, 5 to 10 years. Yeah. But again, I'm not a proponent for term.
No.
Unless it's for a small period of time.
You've said that, yes.
Yeah, okay. You're giving money away.
No, you really are. You really are. And as you've said, you can use this as a bank. Yep. Meaning if you want to put more money in, then you put the 15,000 in. Say you come up with Uncle Joe dies and you get a $50,000 inheritance and you want to add $25,000 in. Yeah. Can you do that?
Yep. You can. Depending on how old you are, I would suggest you contribute to it on a yearly basis or a monthly basis to add to it. But
add above the minimum.
Yes. Yeah.
Yeah.
Because if you're like 40 years old, 50 years old, and you can't do, let's say 50, 60,000 a year, it doesn't make sense. If you're doing it under, you'll get something, but it's not going to be where you're going to be completely
where you need to be because you're at that age.
Correct.
Okay.
So like the young man's policy that I showed you earlier, he's at the perfect age because he's smart enough to sock away a little bit of dough from his earnings and prepare for the future. Even if, like for argument's sake, you're an athlete and you go into the NIL, and let's say you get like $300,000-400,000 grand in your NIL from your NIL money. If you're like 17, 18 years old and you're getting all this money, give me $100,000 and I will reinvest that $100,000 for you and make you a millionaire in 10 years.
We got to talk to
Yeah.
We got to talk to Julius
Yeah.
and make sure Julius knows that, so he can do that for you
Yeah.
with the kids he has. Okay, so you're saying 2% of people really understand the benefits of life insurance and the policies and what it can do for you.
Yep.
And there's a lot of companies, and the way that you can save money on life insurance, it's purchasing a policy at a younger age, and it's whole life insurance,
Yep.
and it's putting money in early in larger amounts and contributing to that, and then it will grow. And then you said basically after 10 years you don't have to pay into it anymore.
Depending on your age. So I set him up for 10 years. I can do it longer, but I just said, hey, if you wanted to a backup and you're not in the league or you're not really working or something like that after, afterwards, like a lot of people, a lot of athletes who, because I have a couple of colleagues who played in the WNBA. And a lot of them, once their career is done, if they're not in sports, they're working a regular job, or there's a few of them selling insurance.
Yeah, because the WNBA is completely different, and
and at the time,
different.
I think they were getting paid like $40,000 a year or something like that.
They were,
yeah. So they never really socked away their money because you can't really
they can't live off that.
Yeah. But they go overseas at the time, before.
Yeah, they would play in the off seasons. Yes.
Yeah, they play in like Russia or somewhere or Brazil.
Yes. Oh, yes. So you're familiar. That's what all the UConn girls used to do. Yep. They would play in the off season, and now there's the 3-on-3 league, Unrivaled. They're making 6 figures.
Now they're making some money. Yeah, I root for them. I'm not a fan of the league only because they don't make a lot of money, but the league itself doesn't make a lot of money.
Well, the league has never made money. The league has just started making money the last couple of years. So when you meet with somebody and you're going over a policy or a plan, do you provide a free quote on their insurance?
Yeah, but getting a quote and explaining what it is two different things. So I never sell on price, because you shoot yourself in the foot selling on price. Because if I say, hey, this is going to cost you $30,000 a year, oh my God, I can't afford that.
Yeah, I'm done. Yeah.
So
explain it.
Yeah, I show you the value in what you're getting before any number is even discussed. And not only that, I always ask, what can you afford what's in your budget that's not going to cost you to eat tuna fish for dinner?
or cat food.
Exactly.
That matter.
Exactly.
Okay. Now, there are also numerous companies out there, and Brian wants to know, it seems like there's new life insurance companies popping up every day. And I know that you're an independent agent. You work with everyone.
Mm-hmm.
Would you be okay with naming 2 or 3 companies that you're comfortable working with?
North American.
Okay.
Symetra.
Okay.
Mutual of Omaha.
Mutual of Omaha. Okay. So like, we talked about, we're not going to talk bad about anyone, but there's
I
also
never do.
like New York Life,
Yeah.
Select Quote, Fidelity.
So Select Quote is a third party. They're not an insurance company.
Okay.
They're a third party where they, you call into they make a bunch of commercials and you call into their hub and they assign. You have me as an agent. I would have to pay to get in with them.
And they would pass leads on to you.
Correct. Yeah, I just haven't done it yet.
Okay.
That's not the kind of insurance I want to sell. What they
are. Globe Life.
I don't even want to sell them either.
Okay.
They're all right.
They're all right.
Yeah.
But you just named the ones that you're most comfortable working with.
Yeah.
And as you said, you can work with anyone in the country. It just depends on you getting licensed, which is a couple $100.
Yeah.
Right.
Yep.
In that area. Okay. Yep. So my friend who has a business, he wanted to know if his business has a pretty good net worth and is very successful, will that make a difference in what he can do with his life insurance policy?
Oh yeah. So if he's a sole proprietor, I mean, even if he's like a corporate kind of person.
No, he's a sole proprietor, I would say.
If he's a sole proprietor and he's got a net worth of $2 to $5 million by himself, I can really get
with the business. Okay.
Yeah. I work with business owners.
Right. No, I know you do. Yeah.
Yeah, I work with business owners. So, I have one guy with a roofing company. I just did an illustration for. I got him something like $40 million in retirement.
Wow.
Tax free
for a roofing company.
For a roofing company, yeah, because he's 45 and he makes on his own I think $3.5-4 million
per year.
So we were able to finance his set him up for finance for his retirement, and the bank is paid right away in 10 years. The bank is paid back right away. So but he had like a $5 million loan. By the time he's ready to retire, he has something like 42 million in cash in his policy that he can pull out, or he can do a yearly income of what was it, $780,000.
Wow. Wow.
Yeah,
$780,000 a year.
Yeah, you can do something with $780,000 a year, right?
There's plenty I could do with that. There's plenty I could do with that.
So like for argument's sake, I used to sell insurance to this precinct in Newark, New Jersey, and I had to get into the officers' heads that I'm not saying don't invest in your pension. Everyone should, especially in a job like that. But if you want a good tax-free income, and if you wanted to use your, if you fund it right, you could buy a car. Like some of these guys, they want to get a 6-figure car, and will go to the dealer and spend $1,200-1,300 a month. I said, why are you going to do that? Because you're paying 10% interest. Why would you do that when for a couple of years, if you put away 20-30 grand a year into a policy, you can turn around and buy that car in a year or two. Cash.
What would you say is the average age where people will start to think about life insurance and get life insurance? Because you've said starting young is most important.
Yep.
But a lot of people don't.
They don't.
So you're going to get people in their 40s, maybe sometimes in their 50s.
Yep, and I do.
What would you say is the average age? that people will get a policy?
Average age are people who are just starting a family. So like
That'll
anywhere,
change it.
yeah, anywhere between like 30 and 35 is the youngest on average that I would get as clients, because they've just bought a house, they have two kids or a kid on the way, and everything is new. So, what can I do to keep this going and take care of my family? So the average age is like 30, 35.
And you talk about, certain jobs. If you have a job that's high risk, like you work on an oil rig or something like that,
I can get them insured.
You can get them insured, but does that affect the policy at all?
The oil rig job, no. If they were like a race car driver, yes.
Yeah.
Because I insure cops, and cops are a very high risk job.
Exactly. Yes.
Yeah, I do. I work with a lot of first responders, and especially police officers. They're in a very high risk job, and some of them make really good money. So I'm like, why are you going to put that into your pension, where it's going to give you X amount of dollars in of income? But what happens is that's going to run out.
Yeah, people don't understand
Programmed
pensions and 401ks
Yeah.
as opposed to life insurance policies.
Yeah.
And they don't understand that life insurance policies are safer.
Yep.
They're tax-free. You're going to make more money. Whereas your 401k, the second you take out $1, you're penalized for it.
Yeah.
Correct?
Correct.
And your pension is great too. But if you end up with another job, you lose your pension, right?
No, because when you leave that job, your pension, you can still keep it. But here's the thing. Some people take a second job because their pension isn't enough. So
right.
I had an officer who, she was, I think 65, 66, and she retired. She only retired with $100,000
in her pension,
in her retirement period. So she's like, I got to go and work another job. And I'm like, you're 65 years old, 66 years old.
Yeah.
You're going
to be a Walmart reader.
Yeah. Or you're going to be a crossing guard or something like that. I mean, no disrespect, but but what it is people are programmed to go to do one thing, and that's because they're taught that through certain banks, because banks want to have customers. So as much as and not every bank sells good stuff. Some of the stuff is antiquated.
So if you go to a financial advisor, someone we talked about who has a Series 6, Series 7, and they want to invest in the stock market, will they tell you to invest in a life insurance policy
No.
or ask if you have a policy?
Nope.
They won't at all.
Because they're trying to sell you their products, especially if they work for companies. So like if they work for Prudential sells car insurance, life insurance, but they don't sell the IUL. They'll sell a variable product or something like that, and their thing is to sell you their stuff.
Right. Okay. And our friend Rob was going over the wills and trusts.
Mm-hmm.
If you have a living trust and you pass away,
mm-hmm.
does the living trust continue to keep going, or everything is distributed to the beneficiaries?
It's how you structure it. It's how you structure it. So like, if you have a trust, and let's say you assign your lawyer to be the benefit. The trust still active. The trust is still active, but that lawyer will be the guy who makes sure that everybody gets what's coming to them and who's in the
So
process.
the trust can continue to still earn,
Yes.
and it can distribute the money as it goes.
Yep.
So it's really its own living entity.
That's exactly
long after you pass.
correct.
And
That's why you do these things.
Exactly. And how long will it go for after you pass? Does it go forever? Does it go for 10 years?
It goes until whatever's in there runs out. So if you set it up for it to be the holder of real estate and financial products, that's
all your properties and everything.
It'll be taken care of.
I got you. Okay. So it distributes that. And is it possible for because Rob was also talking about this, and there was a question. If you die and you don't have a beneficiary, is it possible for the state to get your policy if there is no beneficiary or nobody claims it?
Yeah.
It is.
Okay. Or actually, in some cases, it would be the insurance company. That money goes back to the insurance company. But here's the thing.
The money will go back to the insurance company.
Yep. But here's the thing. You're not allowed to do a policy without a beneficiary. So even if it's like
you're not. Okay.
Yeah. Well, it can't go past that point. Like you have to have either a beneficiary or you put it into a trust.
Right.
That's how you get past the no beneficiary part.
If your beneficiary dies, you have to name another one.
Yeah. Or again, set up a trust. Set up a
trust. Okay.
Yeah, you have the ability to do that.
Rob was also talking about, and I know you've said this as well. You can have an insurance policy, and you can also have a will and a trust. Correct.
Correct.
Okay. So that's
but the insurance goes to the trust.
The insurance goes to the trust. Yeah. Okay.
Yeah.
Okay. And the trust is what will pay out all the beneficiaries.
Correct.
Okay. And that is so. All right. Rocky wants to know if he were to want to work with you, because he is, he's looked online apparently, and you can do some things online without meeting with someone directly. Is that possible with you, or do you meet with them directly?
I meet with them just like how we're talking. We can do a Zoom.
You would do a Zoom. Okay. All right.
What state is he in?
He is in Connecticut.
Okay.
He is in Connecticut. So, and you've mentioned that certain states are better than others for life insurance policies.
Yep.
And you mentioned New Jersey being one of them.
Correct. So, like, if you're in New York and you're trying to get a policy like this, I would need another state.
Right. Exactly.
New York is very limited. I can do certain policies in New York, but it's very limited as to what I can do for you financially.
Okay. So the states that you would prefer to work in would be New Jersey,
Pennsylvania,
Texas,
Ohio.
Texas. Okay.
Yeah. Ohio, Virginia, Michigan. Pretty much anywhere but New York and maybe California.
But I mean, Connecticut's not bad.
Connecticut's not bad. Connecticut actually holds the most millionaires in the country.
Yeah, I know Connecticut's the wealthiest state in the country. Yes, very much so. Yeah. And you spend a good amount of time in Connecticut anyway. Yep. So you could get leads in Connecticut, and that would work out well for you.
Correct.
Okay. And wow. All the information, all the policies, everything that you do is confidential with these people.
Yep.
With everyone that you work with.
So like when I show examples of
right.
policies, there's no names, you don't see anything.
Right. There's no names and you don't see anything.
Yep.
A couple people wanted to know if there's any progress on the Affordable Care Act.
Good luck with that.
There really isn't, right?
No.
And
it's January 8th. I haven't heard anything.
Is it that complicated to set up? I mean, do you see it being something that is unsolvable? Like, I mean, I know they want people to work certain hours and this and that.
What are you talking about for the ACA, for the Affordable Care Act?
Yeah.
It's not about working a certain amount of hours. It's just a matter of, and I hate talking politics. It's pretty much.
No, I just want to know. Yeah.
It's pretty much what Congress is going to let happen. So not let happen. What are they going to vote for? Right.
What can you say like what the biggest obstacle is in holding up the Affordable Care Act?
The tax credits. The tax credit.
Really?
Yeah. Oh yeah.
So, because without the Affordable Care Act, there's a lot of people who do not have health insurance, correct?
That's exactly what it is.
And that's dangerous.
Let me give you an example. I have a client who was asking me about a certain product, and I think she didn't want to change, but she was trying to see if she can get a better price.
Right.
So I think what it was last year, she was paying $220 a month. Now this year for the same plan, it's like $500 or $600. That's how bad it is for the exact same plan. Yeah. And she asked me, she said, I can afford to pay the increase, but I don't want to. And I says, I wouldn't blame you. But for what you need, can you find that plan somewhere else? And she said no. So I kind of left her to answer her own question. Because I always say you get what you pay for. Even my insurance, like I don't do a lot of going to the doctor. But last year I was paying nothing for my health plan, and I had it with Aetna. Now Aetna is out of the ACA.
Yes.
So they put me on Oscar, and I'm paying. And I hate to sound petty, I'm paying like $50 a month for it, but I was paying nothing last year.
Yeah, of course.
For the exact same thing. Now my case is minor. It's just the principle. I was paying nothing with a different carrier. Now that carrier is out. Why is that carrier out?
No, my friend is he has a family of 3, and he was paying, I think he said he around $1,200 or $1,500 last year for his health care.
Mm-hmm.
And this year it's jumped up to $2,500.
Yeah.
For the 3.
Yeah.
And
it's probably not even a gold plan.
He's like, I don't get this. And then it was right after Christmas. He had to go into the ER. First of all, it was a 24-hour wait for him to be seen.
Mm-hmm.
He had a CAT scan, and he got a bill for $31,000. It obviously didn't go through insurance yet, but he was looking at it, it's like $31,000 for a CAT scan. It's like, what is wrong with this country?
Yeah.
Because he believes that we, with the taxes we have, with the minds we have, we could put together a better universal healthcare plan.
We had a better universal health care plan.
We did. But I'm saying that's what he's saying, that, we can put together universal health care and, for everyone, and just forget about it. And we're making a mountain out of a molehill with what we're doing right now.
Well, the wake up call is this, and I'm not naming names. I'm not naming political parties because I'm trying to keep the program going.
No, like, I get
it. But when you're a politician, your insurance is already paid for. You have the best insurance on the planet. Politicians have the best insurance,
and it's paid for.
It's paid for. They pay for nothing. So
there's no incentive for them to.
No incentive to
do. What do they care about making a policy? Jesus, that's crazy.
Yep.
All right. Well,
that's the best way I can explain it without naming names.
No, I got you. All right. Well, James, you did another bang up show, phenomenal show.
Thank you.
The last week's show did great. We got your stuff running on YouTube TV. So make sure you check out James. He's on YouTube TV, and you can contact him through his website. And we're going to run his ads here in a second, and you can see everything that he provides. This is just mind-blowing what you can do with these policies. And as he said, 2% know about it. The rest don't. And they're letting this money go to waste when they could be setting themselves up for life, retirement, future, and build generational wealth. This is how it's done.
Yeah.
And it doesn't take much to do it. You just saw what $15,000 can do. So for you to not get involved in this and to not take part is really ignorant. You're just killing yourself financially, because if you're depending on that pension, you're depending on that 401k,
it's not gonna last forever.
A huge mistake. So, James, I want to thank you again. Luther James Insurance. You'll see his website here coming up. You can contact him on Instagram, Facebook, LinkedIn. Please reach out, because he is one of the few honest insurance agents out there that will do what's best for you, put you in the best plan, and make sure that you are taken care of. So don't waste your time. Don't waste your money. Contact James, get an appointment set, and, get your future planned. Otherwise, you're going to be stuck, like he said, eating tuna fish or cat food. So for James Whitfield, LutherJamesInsurance.com, I'm Steve Cully, the best podcast host in the universe. Remember, when life gives you lemons, don't make lemonade. Take 2 oranges, throw them right back at life. Down south, we have Julius Williams and the Trench Mob. Julius trains offensive and defensive linemen. They compete in 5v5 tournaments across the country and also go to college showcase camps. Proud to say they were undefeated at every tournament they attended. Every college showcase camp, a member of the Trench Mob was offered a college scholarship. He's in Decatur, Georgia. If you want to work with the best, work with the Trench Mob, www.battleofthetrenches.com. We have Ned Von Young, Fresh Fold Laundry Company, Chapel Hill, North Carolina. High-end laundry service. They have you book online, You put your laundry out in a clear plastic bag. They pick it up, wash, dry, fold it for you at Land Speed Records. And they also have an online subscription model, weekly or bi-weekly. They offer now a pickup and delivery service, so you can have your laundry done without leaving the comfort of your own home. Again, washed, dried, and folded for you and returned to you within 48 hours. They also have an expedited service. They have deals for college students in the area as well. Check out their website, myfreshfold-laundry.com. We also have James Whitfield of Luther James Insurance. For the last 3 years, James has dedicated himself to the art of financial planning. He specializes in insurance policies, mainly life insurance. He will make you a boatload of money, and he will do so tax-free. He understands the stress that comes with retirement planning. How much do I need? For how long? Do we have enough? Because fear of the unknown is real. To connect with James, you can go to his website, www.lutherjamesinsurance.com. Finally, we have Rob Hill of R. Hill Enterprises, Inc. Rob is an accomplished author. He is a speaker, and he also is an insurance mastermind, along with being a minister. Rob will put you in the right insurance plan for you. He understands the constraints and the rules that go with insurance, but he makes sure that you ask the right questions so you get the right answers. His main objective is to pull people's heads out of the sand, because that is what we're dealing with currently. To connect with Rob, you can message him on Instagram, LinkedIn, Facebook, or go to his website, rhillenterprisesinc.com. Again, he also does speaking engagements. He is a phenomenal insurance agent out of Chicago, Illinois, and you should contact him for any advice, even if you don't want to work with him.